Being involved in a $3 billion transaction that quadrupled the size of the company wasn't enough for him. So he had to go and be involved in the largest transaction in the history of the industry. Today on Stories Behind the Door podcast, the Chief Investment Officer of Extra Space Storage, Zachary Dickens. He's helped build an industry titan, one of the very few people in the history of real estate involved in an acquisition where the buyer was significantly smaller than the company being bought. And that's not even close to the largest acquisition he's helped put together. Throw in an impeccable reputation in the storage industry. I'm incredibly excited to welcome the Chief Investment Officer of Extra Space to the show. I'm going to get to Zach Dickens in a hot second. I got to give a shout out to my friends at Kiwi 2 Construction, Wayne Woolsey and his team. 30 plus years of putting up steel buildings in self-storage and small bay flex. Simply the best crews in the business. If you have a ground up construction project, get them involved early. Take advantage of 3 decades of experience. Now I'm going to get to the guy I really want to talk to today, Zach Dickens. First and foremost, thanks so much for taking some time out of your schedule to talk to us. Very much appreciated.
Absolutely. Thank you, Thaddeus. And thank you. You know, you do so much good for the industry. So it's a pleasure to be here. Thank you.
I appreciate it. And as I was researching this episode, first of all, you were back on the roundtable with me on Storage Unlocked, my other news-based podcast a few months ago. And as I was researching that, I come up with the fact that you got a degree in Russian from the University of Utah, which is fascinating to me. So talk about how Zach Dickens studied Russian in college. How do you end up working in self-storage at Extra Space? Take me through that journey.
Oh, Thaddeus, thank you. My roots in the Russian language stem back to just my love of learning foreign languages, cultures. Gosh, if you've had any Russian food, you know, it's pretty good. The world's changed a lot since I got involved in sort of my understanding of Russia. I lived in Russia for a couple of years. I lived in the great city of St. Petersburg, and I just really fell in love with the cultural aspects of it. It really stemmed from the people, the literature, like I said, the food and the interactions I had at that time. This was back, and I'm going to date myself if that's okay, but this was around 1995. Communism had just fallen. You'll probably remember Boris Yeltsin was the president in Russia at the time. Then I was in St. Petersburg as a young person and just enjoyed the city. It was just a great place and really more of a European feel, but with the mix of the communism and that sort of thing. And they were open to the world. There was a big trend at the time towards globalization and where we were ending up. And I thought, man, if I could just learn this language, and it was very complicated. And trust me, you know, books on tape, anything I could do to learn that language, interactions. We just didn't have the internet back then like we do now, right? To help facilitate it. But then I just got into that. And later, after I got my Russian degree, I was kind of left with 2 different routes. Do I try to do the business aspect, and I needed to up my skills, or do I go into more of an academic role and try to work for one of the universities? The challenge there is, and maybe I'm too much of a capitalist at heart, the salaries of many of my professors, they were marvelous, but they were way underpaid. And I looked at that and I said, hey, I have certain goals. I'd like to have a family and enjoy that. And there's a pretty lady I've been courting for a while and I'd like to get married. How do I make that happen? And I got into business. The challenges, though, around Russia is I love to have continued in that vein and gone out and done more in an international career. But some of the geopolitics of that place have changed dramatically. And I don't, you know, it's just the environment that we're used to is operating here in the United States. We take it for granted. It doesn't exist like that over there. You know, and that was the era of the oligarchs and the privatization of taking assets and really turning them over into the private sector. And there was a lot of corruption during that time period. And I just didn't feel comfortable operating in that environment, as you can imagine. So anyway, that's a funny story to get going on. But I really had aspirations to live internationally. But I'm back in my hometown and I'm never been happier. So that tells you something about me. It's very interesting.
I want to dig into your start at Extra Space, right? 2002, fresh off of 9/11. For those people that are a lot younger than us, really don't understand what the climate was like in the world at that time. It was a very interesting time.
Sure was.
What was Extra Space like when you first got there, and you know, what was that like for Zach Dickens?
Oh, wow. So it's fun to be on kind of have a front row seat, right, to some great movements in a company's history. And what enticed me to come over to Extra Space, and at the time I'd worked for eBay, and I was kind of looking for a place to settle back in the valley. But I met the Woolley family, and if you know Ken, you know he's a dynamo. You know he has this passion, and Ken was in his 50s at that time, and I'm in my 50s now. And so I look back and I'm like, oh, wow, so much time has passed with Ken, but he had taken his company or was about to go public at that time. And trust me, for a young business school graduate, see, that's how I was trying to make my way back into society, more or less, is through business for my Russian degree, which would have been more in the academic realm. I just saw in Ken the vision and the passion that he had. It was a much smaller company. I'd like to say I was like employee number whatever, but I think I was employee number 150 something, maybe Thaddeus at the time. But I was really engaged and I was super excited to hear Ken's vision about what storage could be, because Ken up to this time had developed a lot of properties, managed quite a few, but he ended up selling them. Some of them ended up with Storage USA. Some of them ended up with Public Storage over the years. He said, though, I have a vision that I can do this and grow my own company. And I believed it to the core at that young age without really having a lot to lose. I jumped on board and I was so excited to be part of that. And that at that time, you know, it was like we did everything, Thaddeus, you know, we took the garbage out at night, basically. No, I joke, but it really did feel like we were soup to nuts in everything that we did. I understood a little bit about development, how we went through that process. I got involved in the acquisition realm, and that has really proven to be a great story in our industry about the consolidation that happened over the next couple of decades that followed. So you can see it's kind of an exciting time to be in the industry then.
I'm fascinated by this Storage USA deal. I'm new in the industry, right? I got into storage in 2021. It was the heyday of COVID, but had never
Yeah.
really done a ton of research about the early days, and so it's fascinating to go back and look at that acquisition. Talk to me about your involvement in it and what it was like at the time for Extra Space to more than double in size with one acquisition.
Yeah, and that's true. And it was almost 3 times our size, right? So what had happened is it just to kind of set the stage a little bit to go back in time. General Electric, and I don't remember who the CEO is, may have very well been Jack Welch at the time. It might have
Yeah.
been Immelt. I can't remember. I'd have to look back at the thing to see. But was doing a lot of acquisitions. They were really the epitome of a conglomerate, right? And they felt like through
Yeah.
diversification and their Six Sigma program and some of their other innovative management practices that they could do a lot of things. One of the biggest divisions at the time was GE Capital, and they were acquiring a group. I think it was called Security Capital, if I'm not mistaken, who was under contract to buy Storage USA, which was a Memphis-based group of properties run by Dean Jernigan. Now, we all know Dean in the industry because Dean later became the CEO of CubeSmart. And in fact, he implemented the name change from You Store It, which was widely used by many, and it shouldn't have been. But anyway, ended up into CubeSmart. So Dean is kind of a legend in our industry because of that. Well, they had about 470 properties, not quite, something right around there at the time, and Extra Space was small. And what we learned was we'd love to do it, but we didn't have the wherewithal at the time to do it alone. So this kind of harkens back to some of our philosophies around adopting joint venture partners. And at the time, we had a development program that was existing with Prudential Real Estate, PREI at the time. Now it's known PGIM, and they're the real estate arm of PGIM. So Prudential had done a lot of work, primarily with Ken Woolley and Spencer Kirk. And these are some names that are important to my history, right? Because they were really the ones that set us on our current trajectory. And they had pledged to go and invest and co-invest with us. And if the numbers are right, I'll remember it was a $2.3 billion deal. We put 500 million into it. And then we formed a lot of smaller joint ventures with various entities that Prudential oversaw the management of. So they put 1.8 billion into the deal. And it really does speak to the trust that they had. And we were able to close that very, very quickly. Now, my role was fun, right? So my role was to look at all the assets, try to determine how they would fit into our portfolio, try to figure out where we were headed, I think that the portfolio was only 70 to 80% full at the time. It had some issues kind of around occupancy. And that was a philosophy I think that they had adopted at Storage USA to keep rates high, and not really be responsive. We're very, responsive to rates today, as you know. But they had really, I think, kept rates higher and seen erosion of their occupancy happen. So we took it over and we're a little bit more nimble on the rate analysis. And so that was my job, was to figure out how to implement that and to put all those pro formas together for 460 something properties. Was quite a task. There were a couple of analysts working on it at the time, but this was a, roll up your sleeves and dig in
Yeah.
type of endeavor that we all engaged in. At the end of the day, it was awesome because it was 2005. We'd only gone public in 2004. Uh, Quickly, our growth, it put us on the map, and we really felt like we were off and running with some really great properties. We brought a lot of employees initially over from Storage USA. Some of them stuck around, like Samrat Sandi. He started with Storage USA. He's now our chief digital officer. So there's a lot of great partnerships and people we found during that era. So you just kind of have to stick around and be part of this business, and it really pays dividends down the road.
One of the things I found fascinating about it is, you don't just integrate that company in a month, right? That's a lengthy process. It could take a
Yeah.
couple of years to get everything smooth. Well, fast forward a couple years, late, 2008, all of a sudden the GFC comes on us. Talk to me through, how things were at Extra Space during that time and kind of how you guys navigated, because still steady growth and obviously the exponential growth in 2005. How did that go through what was an incredibly trying time in the general economy?
Yeah, I appreciate that question. There are a couple of individuals I think that formed the core of our leadership group that were very instrumental in paving the way. One was Carl Haas. I mean, he's been a great mentor to many of us on the management side. Carl came over from Storage USA. I'd be remiss if I didn't mention his leadership skills, because he was able to really chart a path for us and keep the continuity going. Because it just takes stable leaders to talk it through. Nobody wants to be part of a recessionary cycle, and they're particularly pronounced in real estate. The one thing, and this is interesting more to my story, that I found is because of the size of our individual assets, we could go, and where the large banks were struggling at the time, you probably remember there were a lot of bank failures that happened because of the real estate crisis, right?
Yeah.
They got absorbed, many of them, by other banks. But what it allowed us to do is that we had individual assets that were um, more divisible, if you will, and unencumbered. So we could go out, and if we had a big slug of debt coming due, we could break it up and get loans. At the time, for example, I was doing acquisitions. Well, I just switched hats and roles just the next day, and I was calling banks for money, right? One of the local banks here in Utah is Zions Bancorp. We'd never done a deal with them before, and it was a shame because we're a great partner. We just didn't have the opportunity to do it. Well, I called a regional bank that had stronger standing at the time and wasn't impacted by kind of the contagion of the mortgage and the subprime issues. And so I learned quite a bit that it's working as a team, it's working and being creative that makes all the difference in this world. And so that creativity, even in finance, is sometimes it can be a little more mundane and analytical. I find it very interesting, right? Because there's ways to create value even in tough times. The great news for those banks that we did deals with, our performance, while tough from valuation standpoint, wasn't really affected with a lot of move outs at the time.
Yeah.
People stuck around, and it just speaks to, I think, the viability of our product in tough times. Americans, and we may be heading into tough times right now, right? We don't know for sure, right? But I think storage will fare very well given its fundamentals, in that it's still very affordable. You know, people downsize often during tough times. Where are they going to put their things? And they come to us, right, in the industry. So it's both somewhat, great during growth eras, as we saw during COVID and coming out of that, but it's also good during recessionary times. Maybe our ups and downs aren't as dramatic as like multifamily or industrial, but it's just a really great asset class for the long term. It's very durable income that comes from it.
I want to get into that a little bit because I'm fascinated by what's going on in the market today with the
Sure.
storage REITs. But before I jump to today and kind of project what's going on forward, You also were involved in the, $2.3 billion acquisition of Storage USA. Fast forward your, I think, 12 plus billion acquisition of Life Storage in 2023. Talk to me about that transaction and maybe how your role was a little different in that one than the first one, or maybe it was similar. Take me through that.
Oh, it was similar in some regards. The valuation, the analysis that happens, different in scale and magnitude, I would say. But maybe it didn't feel that differently, right? When we were small then, we were a little larger. It was really more peer-to-peer type of a merger that happened with the Life Storage team. Here's what I learned, and it was very humbling, is that my role was very small in the grand scheme of things. It was really the efforts of the operations team and many, many people involved to integrate our systems, from the IT teams that came together to the human resources to the field. Because really, if you think about where we're heavy on a lot of different people in this industry, it's at the store level. And that's what matters, right? We got to keep the lights on, and we got to keep the people paid, and they've got to keep them happy to continue to manage our business in a productive way. And that took the most integration. So it was really great to go through that process with a seasoned team that knew what they were doing. The other thing is, it was a friendly merger. Sometimes you hear about, things that don't go friendly, that are more hostile. I don't think Life Storage obviously wanted to be up for sale. It wasn't their own bidding that got them there, right? But
Right.
ultimately, they sided with us in a friendlier merger. And I'm just really pleased about how that went. Because if you were a fly on the wall in the conversations between the senior management teams of both companies, you could see everyone was working together and trying to row in the right direction together. That was cool, because I don't know how you do it if it's adversarial, because you would have had a lot more downtime, because people can undermine the process that you're going through to integrate the two systems across. So it was really humbling to me. I'd like to say I had a lot to do with it. I could see the numbers and I could see the genius of doing it, because this is really a business of scale. That's what we got. And I think we're a lot better together and a stronger company bringing the two together. But I just think it's a big, heavy lift. And having the participation, the willingness of both sides to do it really, really helped us in the long run.
This begs a question that I ask a lot. I told you I got into this industry at 47 years old and
Yeah.
had been in numerous jobs before it. How thankful are you that you work in self storage and the attitude of the vast majority of people who work in this industry?
I love this industry. It's an interesting, quirky industry, though, isn't it? Where it's
Yeah.
a lot of entrepreneurs, and bless those entrepreneurs for all their efforts, because they make it happen. Isn't it great that there's a business you can kind of jump into and quickly get up to speed, where the public doesn't necessarily discern whether they've got green doors, or I like our green doors, but it doesn't really matter. It could be pink doors, yellow doors. It doesn't matter, and you can have a viable business, right?
Yeah.
So it really speaks to that. I'm thankful for it. I would never have chosen this initially. I don't think kids go through elementary school or whatever and they say, "Hey, I'm going to be I want to be on storage." They may want to be on Storage Wars or that TV show, but they don't want to be on the board of a storage company. But
I'm 200 interviews into Stories Behind the Door podcast, and I
yeah,
have yet to have one person who said they started out thinking, and that's even like the
yeah.
John C. Lindsays and the Alex Burnhams of the world who were born into the industry. They still didn't think they were going to end up in storage. But to your
I
point,
know. And if you hear their
what
stories, they've
incredible
been in
people.
lots of businesses, right? And very
Yep.
few have succeeded the way that storage has for those individuals that you just mentioned, right? And I would say
100%.
the same for our founder too, who's really been in a lot of different interesting industries. Over the long run, storage just aren't we just fortunate to have found it? One thing I would note about our industry, and I think it's really interesting, I go to ICSC. That's
Yeah.
the shopping centers in Vegas.
Yeah.
Occasionally, I've been to one or two of those in my career is all, but I see a lot more competitive forces there. If you go to one of our SSA industries or the ISS trade show, you see a lot more cooperation that happens in our business, which,
Yeah.
it's healthy. They would look at it and say, "Oh, it's not as competitive." But if you look at the competitive DNA of a lot of our industry folks, they're as competitive as they come, but they see a greater good. particularly with some of the intervention and regulation that we've seen from government recently. I think we have more to gain. Yeah. So you have a lot of independent operators who are willing to work together for the betterment of the industry. And I would say at the end of the day, for the consumer as well. So there's a lot of positives that we can bring together by working together. Now, I'm also glad for the competition in a strange way, right? It makes us better. And steel sharpens steel kind of concept, right? That we all go through. And I
100%.
think that's actually really good. But I look at it as a broad playing field that storage in Salt Lake City does not compete with New York City, right? So I can be a successful person just owning a property here in Salt Lake that outcompetes its competitors, right? And I don't worry about that. But it's great to have what I do is a really diverse portfolio that competes broadly. And we can stomach the ups and downs of oversupply in a certain market. But so anyway, long story short is we're a unique group of people. I think we've all been fortunate and blessed in our lives to have gone down this path. None of us would have chosen it early on if we would have seen the outcome. I think there's it's fair to say most of us would have chosen that path. I would
There'd
have
be some
invested
more
heavily
third
in Google
graders.
too. I would have put a lot more money in Google, some of this AI stuff.
Oh, that's too funny. Want to ask you, the Life Storage merger happens in 2023. The last 3 years, vastly challenging
Yeah.
overall in the industry. What's it been like from your perspective? You're 20 years in when the Life Storage merger happens. All of a sudden, we come into this, obviously COVID creates an unrealistic boom. But I don't think anyone really saw the level of the rebound that was going to happen from it. What's that been like for Extra Space as you're trying to merge the Life Storage stores? And you talked about the operational lift that has. At
Yeah.
the same time, you have the interest rate challenges, and then, the development craze that sort of added a whole lot of square footage to the market. What's that been like for you folks to handle?
It has some challenges, clearly, right? Maybe the better long-term question that we can all ask ourselves as I think about this is, what are the opportunities it creates? Because those are some problems. By the way, we saw similar types of dynamics in 2006 and 7 before the crash. Not like now, maybe as pronounced, because I think we became the darlings of real estate during COVID, right? Everybody was using our product. The market's pretty efficient about reallocating resources and maybe overshot it in many markets, right? So I
Yeah.
think, like, I have a mixed view on it. New supply, it's been hurtful to some areas, but in others, it was absolutely needed and we were undersupplied. So I can't speak uniformly about the entire United States, for example, but I would say it's created a lot of great opportunities for us in certain ways. And there are a couple. So we are now and have been for quite a bit of time the largest third party management company. And I think when people are having their challenges, they look for strength and they align themselves with that strength. So we've been the beneficiary of a lot of new management opportunities. I love those because I think that creates more opportunities down the road for us to continue to manage well. You might know that we acquire quite extensively from that pool of assets. And so we got to get an opportunity to see how they perform, and we have absolute transparency into the financials, and that's really helped me to grow our business of acquiring assets. There's another one where we're doing bridge lending because a lot of these assets were built in the last couple of years and they need good financing to get them to stabilization. So we started bridge lending, and it just gets us closer to those developers and their relationships. And we've done, multiple loans with many developers over the years. And that has really led to our profitability being enhanced. When same stores are slow and maybe their growth because of the supply, our third party management and our bridge lending continues to grow. So it just gives us other ways to continue to experience that growth. And I think it paves the way for the future. But you were right. We're at a tough time right now. That's not uncommon when you see a build cycle that's happened, kind of a boom cycle of this. And we're in the recovery phase. And I think we're further along than a lot of us think we are in the recovery because I'm seeing slowing new starts. I'm seeing absorption rates work really well. I'm seeing rate pricing floors that have come in, and that's all helping us in this industry. So I see green. I see really, I was going to say lots of green doors ahead. I see blue skies ahead and a lot of green doors. But I'm
I love it.
thrilled about where we're going as an industry, yes, we will have supply issues that need to work themselves out for a couple of years, but our utilization rate with the American public is continuing to notch up every year and get better and better.
Incredible.
And I think we're in a good kind of heading into a sweet spot. And maybe I don't want to be premature and announcing a recovery by any means, but I think we're on our way to better days. So hopefully that gives you some insight in how I'm thinking about it.
This opens up the final question I really wanted to ask you, which is,
Yeah.
obviously there's a major announcement earlier this year, one of your competitors buying another one of your competitors. I've been following the stock price just based, they offered a 35% premium on what that stock price was trading at when they made the offer.
Right.
NSA is now trading above what the initial announcement was, which is a reflection of what your competitor is doing based on it's a stock transaction. The question I'm getting to here is that it appears from my uneducated seat, I'm not an MBA in finance. I don't have stock market experience, but the stock prices seem to be the Wall Street seems to be sending a message that they feel like the future for self-storage is healthy. That seems, I don't know how else you're seeing the valuations that you're seeing, because we're not seeing interest rates go down. If anything, in the short term, geopolitically, they've gone up.
Yep.
We're not seeing increased movement in the housing market that's happened in any great way. So talk to me I know you can't get specific. You guys are a publicly traded company, but on a macro level, it seems to be that investors and the market in general feel very strongly about the health long term of self storage.
I think you're right in your analysis. I think they do feel that. I think that maybe, and this is my feeling at the core, is that we were oversold and that the valuations didn't properly reflect what was going on. If I Because I'm on the front lines with our acquisitions team, I'm looking at cap rates, right? And what's happening is that sales are happening at lower cap rates than where the public companies are trading. Now, something's got to be amiss, right? They should line up to NAV. That net asset value should be very similar. But we're trading at a discount effectively as REITs, even though we're more diversified than any portfolio I'm really looking out there today, right? Which brings me to kind of like public storage, looking at national storage affiliates. It's a very diverse group of properties, and there's an implied cap rate there that I won't opine on, but it kind of shows you the difference in the valuations. I felt like maybe they were oversold. Clearly, the market felt that way if you looked at it today. So it's kind of those things where I look and I go like, man, I'm buying at something lower than my implied cap rate. Maybe my value should increase. And in the last few weeks, even though interest rates and the 10-year treasury has popped up because of the uncertainty around the war effort and inflation, which is always around the corner. It's the boogeyman out there, right? For all of us in our industry. So even though those things loom large in our thinking today, they're anticipating a recovery. I just think it's partially that there is a recovery they're viewing underway, and we may just be, sort of seeing the green shoots of it today. But I think it's also that we were oversold and just our value is greater than if you looked at just breaking up the parts of a company, which we would never do. But in concept, we ought to, 1+1 ought to be 2, or maybe even with REITs, a little more than 2, right? Because of the synergistic qualities. But I'm
Yeah.
not seeing that. So either that the private assets are overpriced or we're undervalued. And I don't think that
Lo-
both can be consistent.
Love the analysis. I'm wondering, is there do you get a little bit of a chip on your shoulder as the chief investment officer of Extra Space when you see a deal like that get announced? Maybe not too bad because of the life storage transaction still at a higher price valuation wise, but does that give some fire to Zach Dickens for what's next?
Oh, yes. But you know what? I've been referred to as a golden retriever. If you have a golden retriever, or I have a lab, like she's fun, right? I throw the ball, my arm's getting tired before this dog gets tired. I'm like that lab. Every day I love to show up to work. I love to figure out how to grow our company and keep that passion alive because I've been doing this so many years. And I was reflecting with one of my colleagues earlier today about where I've been and has my job changed tremendously? No, but we're in the business of growth. And
Love it.
when you're around that, it's infectious and it's exciting. Our best days are ahead. And to put that kind of in a framework of like our growth is slowing because of the size of the base, but there's no reason it needs to slow. We just need to find good opportunities and not let our imagination be limited by what we see in front of us today. Because I really do believe that there's a lot of growth potential in my company left and in the industry as a whole. And I think, I'm long American economy, right? I'm long the economy. I'm long Americans. I think we're going to be very prosperous for years to come. And that's only going to have ripple effects down through the industries that we all support, including storage. So I'm excited about the future, if I might say that.
Cannot tell you how thankful I am. This half hour went by in the absolute snap of a finger. I was looking forward to it. It was even more fun than I expected it to be. And again, honored that you took a half hour out of your incredible busy schedule to come and join me and share everything you've shared. I appreciate it greatly.
Oh, you don't know. I'm honored likewise. And thank you for all you do, Thaddeus, for the industry.
Very much appreciate that. Humbled that you think I'm doing anything for the industry at all. So I appreciate that. Before I sign off, I want to give one more shout out to my friends at Kiwi 2. Recently changed their name, Kiwi 2 Steel. Wayne Woolsey and his team, 30 plus years of experience putting together steel buildings and storage and small bay flex. Touch base with them early if you have a ground up development project. They're going to help you save a lot of time and money and avoid mistakes that they've seen over their 30 plus years in the industry. Reach out to them at kiwisteel.com. Well, he's Zack Dickens, Chief Investment Officer of Extra Space. I'm Thaddeus Campbell. That's it for this week's episode of Stories Behind the Door podcast.